Good morning, Mitch Lichterman here at Target Rate, and I just got in the office and I'm just checking things out. Now the first thing I do after I turn on my computer is I look at my email box, and it's generally filled with spam. I get a lot of it, and I hope that the messages that I'm sending out to you are not falling into that category on your end. We try to provide value with the message, some information, whether it's a tip or information about what's going on in the world, the economy, specifically interest rates in general. Whether you've already refinanced and you're happy with the rate you've gotten, or you just like to stay informed, I hope that these messages can provide that information for you. Now, our financial market is actually quite interesting to watch right now. Whether it's interesting fun is another story. Obviously, the stock market's been a big mess. This Friday, there's a meeting in Jackson Hole. The federal Bernanke is going to speak. Supposedly, we're going to have some new data that's going to come out. Not a lot of movement from the Fed from this meeting, but there's supposed to be a lot of interpretation from it that could possibly mean that we are actually in a recession, and we could see a further decline in the stock market prices, maybe even a further decline in the bond market as well. But for right now, we're waiting on what that meeting is going to say, and the market is already reacting this morning. The stock market's down here on Thursday morning. The European markets are in bad shape, as you know. And there's a lot of scrambling going on, a lot of financial news. Steve Jobs retired or resigned as president of Apple. What that means for this huge corporation is another story. The shares are tumbling a little bit because of that. Gold, after its high, has had some sell-off, and that's dropped. There was the hugest drop in gold in history yesterday. And, of course, the other big news this morning is that Warren Buffett has invested $5 billion into Bank of America to buy shares, take an interest in that company. What that will mean for that struggling financial bank is another story. We'll have to see. As far as the interest rate market, what's it mean for us? Well, it means is that because of all this turmoil in the stock market, investors are putting their money into bonds, and that's driving the yields, and that's causing interest rates to creep up just a little bit. Across the board, we're seeing interest rates kind of move up about 1/8%. Our 30-year fixed rate this morning is up to 4.375%. Now, I say up to that only because the low of the low, we were down to 4 1/8 at one point a couple of weeks ago. But 4.375% is still a fantastic rate, especially on 0 points. The 15-year fix at 3.625% is followed, and the 5-year fix at 3 1/4 the same. On our jumbo market up to 729, we've crept up a little bit again as well. We're at 4.5% on that 30-year fix. But the one rate that has not changed during this entire 2-week process is the jumbo 30-year fix. Those are the loans above 729 all the way up to $2 million. That rate has held steady the whole time. We're still at 4.875% with 0 points. If you have a loan scenario, you're looking to buy a property, now's a great time to look at investment property. Give me a call, send me an email. Oh, one more thing, that FHA market too. We're at 4.375% on the 0 point FHA. There you have it. Mitch Lichterman, Target Rate.